Okay. Let's try this all over again. What a happy, lovely world we live in. Hey, good morning. It is, I think I still remember, right? A Tuesday? June 9th, 2015. Welcome to the Daily Forex Trading Strategy session. My name is McDonell. I'm the Chief FX Market Strategist for TradersWay.com. Today we're going to do technical analysis. It's going to be fun till the daddy takes a T-bird away. Let me remind you that trading and investing is risky, not appropriate for everyone. Your past performance, good or bad, never predicts future results. Stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Don't touch the hot stove, you might get burnt. Cool. Okay. Okay, so you're looking at EURUSD. It's making a series of lower lows and lower highs. It has been since exactly the London Open. This is a 5-minute chart, and you would be selling high cycles. It's just that easy. What more is there? London Open, oscillator. This is a 5-minute chart, guys. Halfway point, oscillator. Okay. Oops, come on now. Oh, I didn't mean to do that. Hang on, come on. Okay. That's all it is. You can also drag this part across and see that it used to be support. You can drag this one across and see that it used to be support. And those are the role reversals, right? Interesting, isn't it? This is stuff that we cover day in and day out, the lower low, lower high, lower low, lower high, lower low, lower high. You notice how on the 5-minute chart, it makes the lower low, makes the lower high, so that is actually a sell here on the 5-minute chart, then another lower low, and then it comes all the way back. You know what's going on? It's a fractal issue. What I mean is, you change it to a 15-minute chart, and it's the same pattern, but now on a 15-minute chart, and it just needs a little more time. So now you zoom in, and there's the lower low, lower high, sell. See? There's the support, resistance. Lower low, lower high, sell. Lower low, lower high, sell. It's just you're not going to get the oscillators on a 15-minute chart because you don't use oscillators in a trend. What do you use in a trend? Fibs. Okay, let's take a look. Okay, 50% retracement. $786 retracement. $618 retracement. It's made a lower low. What's going to happen? You're going to sell the lower high. Probably take a couple hours. Oops. Okay. Ah, man. Can't get rid of that either, huh? Guess I can do it manually. Any questions? I mean, at some point, right? Even if you're a bull, at some point you should recognize the lower low. Okay. I'll show you what I was doing yesterday. Where is it? See what I was doing here? Let's zoom in. Oops. Where is it? There it is. This is how I was drawing it yesterday. Higher high, higher low, gone. Higher high, higher low, gone. Higher high, higher low, gone. Higher high, higher low, right? There's a little buy in here. And this is London Open. It's beautiful, isn't it? Even if you missed the first one in here, you definitely must recognize this lower low, right? Right? Even if you've been buying all yesterday like we were, right? Trade, 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 right? 5 or 6 trades right there. Even at some point, even if you bought it here and it went up, you're still going to be bullish mentally, right? There's just no way you're that smart where you've bought it 9 or 10 times in a row, made money every time, suddenly you want to sell it. Oh, well, 1350. Well, who cares? Right? There's no way. I'm not going to believe. So, what does happen? What is the clue on the clue train? What gets you to go from bullish to bearish on this time frame? Yeah, as soon as it makes a lower low, you realize what's happened. And if this low, certainly this low, right? And as soon as it does it, this is what I've been teaching you for weeks and months. You sell it, what used to be support is now resistance. It's called a role reversal. And you got to wait now. You got to wait another 2 hours. And 2 hours just happens to be how long it takes to make a 15-minute cycle, generally speaking. Okay. You're not using oscillators per se. Or, you know, another trick, if you want a little trick of the trade. Here, let's do it here. I'll show you how you can do this. Change the properties to 50. 50%? Boom. So instead of using 75-25, you could use 50-25. If it's trending hard, it's not likely to make full cycles to the upside. Right? Because everybody's selling. Think of it. Why is it trending down? Because everybody's selling it. Right? So here we are. Now if you wanted to, you would fib this area. Okay? Well, keep practicing, Mike. Bet you anything within 10 years, you'll be much better. Okay, so that's just price action. Just happens to be in the direction of my bias, so, you know, I'm going to drink that Kool-Aid pretty fast. Sometimes in this situation, what I'll do is I'll do a macro fib instead of a, you know, the smaller fib. The reason for that is it might want to bounce off of this 55 EMA, which predicts a double top or lower high. So if it bounces, it could do like one of these things, right? It could go all the way to the 786, and then, you know, whatever. Or let's say all the way to the 618. My spidey senses tell me if it did, it would go a little higher, but whatever. And it would come down to the future 200 EMA. 618 predicts a 1382, so we'll put it right there. And this 200 EMA over the course of time in the future is going to slowly meet us over in that direction anyways. Capiche? Which means if you're a bear, you probably don't see support. You just see it falling down, right? Okay, that's fine. Good. If you're a bull, you should probably get ready, yo. And what kind of things would you be looking for? Well, first of all, on a 15-minute, ask yourself, is it oversold, potentially ready to go up? Let's take a look. No, that's not very good, is it? It's kind of terrible, isn't it? What about the 1 hour? Beauty. That's beautiful. So what it's saying is price can fall a little bit farther, and at which point the next level of support, if it does fall farther, is going to be very attractive to a bull. So it might not be yet, but let's throw out a guess here. Let's say it falls further. Let's change our analysis here. Instead of measuring what's happened so far, all right, I'll just leave that deleted. Instead of measuring what's happened so far, let's have a hypothesis. What, pray tell, do you think will happen if all down to 112.0000000? Could that possibly be support? What would that oscillator look like on the 15-minute chart? Well, if it fell for another half an hour to 45 minutes, half an hour to an hour, it would be oversold, right? Certainly wouldn't go higher. So where would the oscillator be in an hour if it fell for another hour? Lower, right? See, remember, what the oscillator is measuring is price's ability to make lower lows. Oops, come on. I guess I'll do it this way. Okay? And once it stops having the ability to make a lower low, the oscillator turns the other way slightly and eventually starts cycling up. So all it's doing is measuring price's ability to make lower lows relative to the recent candles. So here you could see we were making lows just fine, and then all of a sudden the oscillator starts rising up because we stopped making lows, and then as soon as it turns red, it should drop again. So if it fell for another hour, this oscillator would drop down because the next few candles would look like this. Okay? So the oscillator would come down. You guys following me? That's what the algorithm is doing. Okay? So let's say it falls for another hour. Suddenly the 15-minute chart's going to be oversold. The hourly is going to be oversold, more so. We're going to be at a psych level, which could act as support. What else would a bear, what else would a bull find attractive? Okay, it just happens to be approximately somewhere between a 50% and 618. So it's a nice, good, bullish zone, for example, if it decides to fall further. We don't know if it will. It could go up right here. Right now, because it's a 382, it could just go up and up and up and up. Fine, whatever. We don't know. We're not talking about that right now. We're talking about this scenario. Okay? So we'd have a very, very oversold hourly chart and an oversold 15-minute chart. So what if now we get down to that zone and we flip into a 5-minute chart and we see an oscillator like this on a 5-minute. We'd have a 5-minute that wants to go up, a 15-minute that wants to go up, and an hour that wants to go up. But does it have to go up? No, because all it's telling you is that it's oversold on every time frame. But of course it's oversold. Everybody's selling it. But your alpha, your ability to outsmart the market, is telling you that we're in a buy zone, so you're going to buy it, even though everyone else is selling it. Well, that's your call. So how could you reduce risk? Well, you could buy the cash market and sell the derivative through a binary option and remove 40% of your risk that way. That sounds pretty smart to me. Or we can revisit our topic yesterday and say, well, on a 5-minute or even a 1-minute chart, would it cost you a lot of pips to wait for a reversal pattern? Or a moving average crossover? Would it kill you to wait that extra 8 minutes? But then you would have a reversal pattern on a 5-minute chart that wants to cycle up. So if it does reverse and go up on a 5-minute chart, what's it going to do to the 15-minute oscillator? Well, it's going to get that to cross up and probably get a 5-8 cross up. And then it eventually will make a micro high. Then it's going to make a retracement, which would create a 1, 2, 3 reversal pattern, which would then put you up significantly on that one, which would then turn the oscillator on the hour. And all of a sudden you come back 3 hours later and the thing is up 120 pips. Because now the hour has to do its cycle. How long does it take a 1 hour stochastic cycle? 8 hours. Sometimes 12. Especially if you reverse the market, it'll be 12. Right? And if you really want to impress your buddies, tell them you're scalping and just simply pull the trigger on the 1, 2, 3 reversal pattern on a 5-minute chart and go, boom, that's me. I'm going to scalp this for 125 pips. Boom. But really, you've set it up on the hourly chart. You're just cutting the corner, and your entries are so refined that your trade strategy is based on the hourly chart, but your tactical entry is based on a 5-minute chart and a very sped up stochastic oscillator. Because you just, you're just that good. Hey, guess what? Baltic Dry Index broke 600 today. Woo-hoo-hoo! Very good. It used to be, 5,000. I think about 9 months ago it was 2,500. And then it dropped to 500. Well, now it's back to 612. Good job, Baltic Dry Index. Wow. All that tells me is China is not buying iron ore and coal from Australia. Amazing how low that is. I should probably show you a Baltic Dry Index chart. Do you guys want to do that? Does anybody have no idea what I'm talking about? I should ask, right? I don't want to tell Wayne because I'll look stupid in front of the other kids. Well, how do you know that we're here? How do you know we're real people? Why would you be embarrassed, right? How do you know I'm a real person and not just a fig imagination speaking into your ear? Okay, hang on. Right? What if I'm your imagination? Oh, yeah. Yeah, I don't like these new charts. Hang on. These new charts. It's probably been here a year. Okay, Baltic Dry Index, 610. Woo-wee! Congratulations, Baltic Dry Index. Hang on. I think I can change this to an advanced chart, which it's so advanced you can actually read it. How do I do it? They've changed it so many times. I guess you can do it anymore. Hang on. All right, can you even see that? Maybe if I zoom in manually here. Boop, boop, boop. All right, I think that's edible, right? All right. Can you see the low here? Just a few weeks ago at the end of May, the Baltic Dry Index was 580, 584, 586. So that's the bottom there, 584. Looks like it was even lower over here back in the beginning of May, 578. Okay, so, you know, it made a high up into the sixes, and we're back into the sixes. Looks pretty good, right? Well, except a year ago, it was just shy of 1,500. So we're at 600 now. It was 1,500 the peak of the last 12 months. So okay, there's been a decline of 40% in the last 12 months. Well, that doesn't sound very good. How about a 5-year? Oh, snap. It was at 2,500. 2,500. We're right here, and this is our awesome recovery. Look at that. Just redonkulously low. So, what is a Baltic Dry Index? Well, the Baltic Dry Index is an index of what? Of the cost of shipping bulk dry goods like iron ore and coal, not computers, not Bart Simpson t-shirts and folding lawn chairs. It's raw material. It could be soybeans. Okay? And so it costs money if China wants to buy some Australian iron ore and coal, which Australia has fabulous iron ore and coal, and it's not that far from China. So China certainly could be a customer of Australian iron ore and coal. So once you buy it, how do you get it to China? You got to put it on a ship specifically designed to carry such raw material. Good. Well, there are only a certain amount of ships. So when China and other countries are buying up these natural resources, well, there's only so many ships available. And if demand is high for the natural resources, which then in turn means the demand for the ships is very high, then prices go up. Okay? Just like any other auction, right? When everybody needs it, all at the same time, prices are going to go up and up and up. And then when prices are down, what that means is there's no demand. There's either not enough people buying natural resources or, and this does happen, there are too many ships. And so what you end up doing is scrapping all the old ships. And then when boom times return, you start building new modern ships. Okay? It's just the life cycle of the industry. So for a while there, China was stockpiling. You know, 6 months ago, China was stockpiling, and then it just all stopped. And that's that. So sometimes I use this indicator as a canary in the coal mine for the global macroeconomy. Okay? So for example, what I've said is, you know, let's watch quantitative easing in Europe and try to use a trickle-down analysis to figure out when the average Johan and Juan actually gets affected by all this quantitative easing. And they start buying stuff from China. China factories start getting orders. What do the factories start to do when they suddenly get a lot of new orders to make things? Well, eventually someone's going to need to buy commodities. So if steel is involved, you're going to need iron ore and coal. Because coal, as my son will tell you, and he is 9 and he knows this, you smelt iron ore and you add carbon and you make steel. Even my 9-year-old knows that. So you need, where do you get the carbon? You use coal, right? So anyways, that's how you make steel. But also, if the factories are firing up, you know, they might need electricity, for example. Wow, Wyatt, that's a good one. I know what you're talking about. That's a very good one. It's actually suet, right? But anyways, if the factories are fired up, they're going to need electricity. They use coal. What kind of coal do they prefer to use? They don't like to use dirty Chinese coal. They prefer to use clean Australian coal. And yes, there is a difference. Australia does have clean coal. So anyways, they're going to need to buy this stuff, and they're going to need to go to, you know. So if they need steel, they're going to need iron ore and coal. If they need power, they're going to need coal, and so on and so forth. Right? It's a big country producing products for everyone else in the world, so it's going to take a lot of natural resources. And the Baltic Dry Index, therefore, eventually should start going up. Okay? What's China been doing since November? Okay? So it's kind of interesting. So if we see this go from 6 to 7 to 8 to 9 to 10, you know, to 1,000, and it's going to be a positive sign, right? Because again, you're not making this up. This is not a sentiment index, right? This would be simply set because somebody is buying Brazilian soybeans and they're moving it somewhere. It's not sentiment. It has nothing to do with feelings. How do you feel about the global macroeconomy? Oh, it feels so good. No, this is money, man. This is money. Somebody's buying something and moving it. So it's a nice little canary in the coal mine. But anyways, I was just laughing as, hey, it's such good news. We've broken 600. we should be breaking 2,000. Wow. Okay. But what was happening? Let's go back. Let's go back to the year chart. What was happening to the European economy right around here? Just totally collapsing. So hopefully Europe gets its act together, and that helps everyone else out. So if Baltic Dry Index starts going up, you might want to consider buying commodity currencies, for example. But you might also want to buy the stock of shipping companies. Have you thought about that? What about shipping companies? Do you think their stock prices are low? If I were me, I would look at the top 3 global shipping companies for natural resources like iron ore and coal, find if their stocks are depressed, and my analysis, my fundamental analysis would be one simple question. Are these companies going to be around 5 or 10 years from now? That's why I want to look at the big ones. Am I certain? So like when times are bad like this, Are they surviving? Are they still profitable? Have they scrapped their old ships? Have they cut all the fat out of their businesses? And are they poised to be the leaders for the next 10 years? And if I can buy them cheap, what's Baltic Dry Index going to do now? Go to zero? Or is that the bottom? And in 5 years, where are we going to be? At 5,000? 2,500? 2,000? I don't know. Right? Could be an opportunity to make money. I love making money. Some people golf. Hey, you got to have a hobby. And then what about, is it going to let me do this? I don't know, CRB. It's probably not letting me do that. I'm trying to cheat it. This new website's so weird. Where's the search? I just want to search Bloomberg. Bloomberg. Oh, here it is. What are you searching for? I don't know. I'm searching for a place to type. What a weird website, huh? Okay. CRB index. CRB is ETFs. No, CRB. I want the ETF. Thomson Reuters commodity. All right, there it is. So Buzz is saying, so now are we heading to a sluggish economy? No, it's been there for a year. It's already happened. So you can't say now that the CRB now that the Baltic Dry Index is down 40%, maybe it's going to impact Australia. No, we've already made our money on that. So what I'm telling you is going to happen in the future. Who cares about what's happened? It's already happened. So if I were me, that's how I would make money. Oops. Where did that go? It's gone now. Come on. Where did it go? There we go. Wow, that's a big ad, huh? So they're not showing me a chart, it seems like. Oh, there it is. All right. So the CRB index now is an index of commodity prices. So you could, for example, if you wanted to, trade the CRB, in this case the CRY, Thomson Reuters Core Commodity CRB Commodity Index. Okay, whatever. I wonder if I could do it this way. It's going to be about the same. Let's try that. No. All right, let's go back. All right, so you could actually trade this, which is really cool. So just imagine making one trade and it's oddities. Not just oil, not just gold, not just silver, not iron ore, not just soybean meal. Okay? Generally speaking, seems like we're in a downtrend in the last year. What do you think? Since June 16th, we were at 309. 1 year later, it's June, as of June 8th, we're at, what is that? 223? Holy smokes. So it's just been down, 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 down. Okay, that's what the past looks like. So it's pretty low, right? But isn't that kind of what you want if you're a buyer of commodities? So I'm not saying buy it. What I'm saying is look for a floor, look for reversal patterns, and maybe a new trend will happen. And then ask yourself, who's going to be the winner, who's going to be the loser? So for example, Have you heard about the egg crisis in the United States? They've had to slaughter, like, I don't know, half of the egg-laying chickens in the United States. Okay? So, egg prices go up. Who makes money? Who loses money? You ask yourself this, right? That's all you have to do is ask yourself this. And you make money. Who's going to win from this? Who's going to lose for this? Okay? So, for example, who's going to buy eggs no matter what? How about fast food restaurants that serve a lot of egg products? McDonald's. No, you're talking chicken. We're not. See, you got to realize that you don't eat chickens that lay eggs. You eat fryers. Okay? So we're talking eggs. So any fast food restaurant that sells eggs, like scrambled eggs and egg McMuffins and stuff. Okay, fine. So if you're now, let's say, how about fast food restaurants that franchise versus ones that are corporate owned? So for example, the ones that are corporate owned, they might lose profit because they're going to have to pay higher egg prices because they buy liquid eggs, right? So liquid egg prices, let's say, might go up. If they go up, they're going to have to them. What do you think? McDonald's is just going to stop selling Egg McMuffins right now? No. Do you think they're going to increase the price from 99 cents to $5 for an Egg McMuffin? No. They're just going to lose it in profits, right? They're going to eat it. They're going to have to eat the eggs themselves, right? They're going to have to eat the loss. Now, what about a company that has 2,000 stores all around the United States, but they franchise, which means they don't buy the eggs, the franchisees buy the eggs. Meanwhile, they still have to pay their franchising licenses to the franchisor. The franchisor is the publicly held stock, and their profits stay the same, while other companies that do very, very similar things but have different business models lose money. Boom. Okay? If eggs at the grocery store quadruple and go from, I don't know how much eggs cost, what, $1 a dozen? What if it goes to $5 a dozen? What happens at Walmart? Do people stop putting eggs into their carts? Yes. So what else would they stop putting in their cart? They don't buy eggs, so they don't buy what? Yeah, see, this is interesting. We'll see, an American would probably say something different right off the bat. Come on, guys. When you eat eggs, what else do you eat? Bacon. So you don't buy eggs, you don't buy bacon. Boom. Pork bellies tank. Have you thought about jumping in? Have you ever thought about jumping in the pork belly market? It was that deuce, it was that deuce. Remember how he talks about pork bellies at Christmas time? Classic scene, anyways. Yeah, maybe you should be short selling pork bellies because of the egg crisis. See how interesting it is? What a great hobby. Now, if my buddies talked less about basketball and football and golf and baseball and you know, fantasy curling leagues and talked more about money, they'd probably be even richer. To me, it's fabulously interesting. Yeah. So you don't buy eggs, you don't buy bacon. Egg prices are high, bacon prices plummet. because there's going to be a way oversupply of bacon because nobody's buying bacon because they can't afford the eggs. Isn't it amazing? Or there's two companies, they have 2,000 stores across the United States. They use two different models. One is going to be punished because they're going to have to pay too much for eggs and lose their profit margins. And the other is not going to be punished because someone else has got to pay the high prices, but they're still going to collect their franchisor fees. One loses, one doesn't. One stock goes up, the other goes down. Easy peasy lemon squeezy. Meanwhile, you go out and buy yourself a yellow Lambo. And grow yourself a goatee. Get your hair dyed. And get, who knows? Forget it. Let's not even go there. Interesting. I hope you find that interesting. So the CRB shows us the general direction of all commodity prices. And then I always ask myself, who's going to be the winner 5 or 10 years from now? Okay. I asked myself when Bank of America was $5, one simple question. Is Bank of America going to go out of business, or will it be around 5 years from now? So, simple question. What? Why doesn't it pull that up? What? What a dumb website. Come on. Get your guide to financial fitness. So there's a different one for stock prices. Bank of America. Come on. Oh, bank.us. Okay, I bought it at 5 with one simple question. Is it going to be around 5 years? Guess it was more than a year ago. There we go. I might have paid 6. No, there it was. Look at, wow, is that the actual bottom? Bought it on the actual day it load. It couldn't have been 5. Let's say I bought it at 6. I thought it was 5. I bought it at the exact bottom. Yeah. That's all I asked. Because it's too big to fail, right? Is the American government going to let Bank of America go out of business, even though it's actually the Bank of Italy? I don't know if you know that. Bank of America is actually the Bank of Italy. So there's no way. So it's too big to fail. Right? So I either lose 5 times the, let's say I bought 1,000 shares. I lose 5 grand. But what's the odds that it's actually going to go out of business? That the government's just going to say, we're not going to bail you out. We want you to go out of business. We don't care about the systemic risk. We don't care about the fact that, you're the Bank of America, the American government, and the American people are going to suffer through this. There's just no way. So boom, I'm going to get bailed out from the government. So that was free money. Easy hobby. So it's the same sort of thing like now that the Baltic Dry Index is like almost 0, or commodities are so unbelievably low, or, you hear about a crisis. What do you say? Who's the winner? Who's the loser? There's an earthquake in Japan. What should you do in the first 5 minutes? Send our friends in Japan, wishes for safety and hope that their family's okay. And the second thing is you buy construction, the stocks of construction companies in Japan, because who's going to clean up the mess? Farmers plant bumper crops of record. Farmers in the United States plant record amounts of corn. What do? Sell corn futures buy wheat futures, buy fertilizer companies. Just the consequences, guys. Cause and effect, cause and effect, cause and effect. So anyways, here we are in our little simple little technical analysis. Okay. And every time it makes a low, okay, every time it makes a low, you drag it across, right? If we made a low, it looks like we're breaking the 3A2. Keep an eye on that. It's a little early yet, but let's just keep an eye on it, time of day and such. So we went off a little off topic there. I tend to do that from time to time. But did you guys find that interesting? Because to me, I have a passion for it, so that's why I can get easily sidetracked. You know, my wife and kids and I were sitting in our backyard having a picnic, and that's what we talked about. I said, hey, honey, did you hear about the egg crisis? And she said, yeah, I read something about that. I'm like, good. How do you think we can make money on that? Honest, I swear to you. How can we make money on that? You know, so because I think once you get into the technical analysis, like I said, if you're doing your technical analysis properly, it gets very boring. I like making the money, but after a while, you're just like, holy, really? You're sitting around waiting for it to come back, then you sell it, and waiting for it to come back, and you sell it, which is cool. I wouldn't call it intellectual, though, right? So I like thinking about what creates the trends and what new trends are going to happen. So again, now that commodity prices are so low, what's going to happen over the next year? Who's going to benefit? I mean, it seems to me if you were in the shipping company of moving things like soybean meal around the world, it's been a tough couple of years, and I think a lot of the posers would have gone out of business by now, right? And let me ask you something. Do you believe quantitative easing in the Eurozone will work? Work to improve, let's say not fix Europe's problems, but work to improve their economy? The answer is yes. Then the economy is going to expand and increased demand for products and services will go with it. Who is going to provide the products and services? Well, then their economies are going to expand. And what will they need? And where are those things going to come from? And who is going to provide them with the products and services? And you just track it. So we're 3 degrees of separation. If Europe improves, maybe Australian ship companies are the ones that you should be buying now, so that in 2 years you have bought at the bottom. Okay. Okay. So where was the other one we drew this? It was 14, right? So let's just move this here. By the way, bulls, did you get a reversal? No. You see, if you were a bull and you were waiting for that 1, 2, 3, because that's what this was drawn for. If you were a bull, you never got your 1, 2, 3. You were never entered the trade. I just helped you not lose money. And the only question was, you know, are you so aggressive that you can't wait 8 or 9 minutes for a reversal pattern? on five, or in this case, it's a 5-minute chart, so it's going to be like a 15-minute thing. But I don't think you got it on an hour, right? Hour, I mean, 1 minute, hang on. Right? So here we are in a 1-minute chart. Did you get a reversal pattern? No. That's it. I'm like, you're so aggressive, you can't wait. What did we call it yesterday? If you buy at support simply because it's support. What trading methodology is that? Degenerate gambling. You call yourself a trader, but in fact, you're just a gambler. Right? Good job, Oscar. Listen to the OW. He's got it. Okay? So, we'll use this as a resistance level in the future, right? Now, bulls still have an opportunity. Where's support? Well, they're going to have to wait till it gets down to this area now, right? And if you're a bull, you wait till we get in here and look for a reversal pattern. Cool, right? Thank you, Eric. Yeah, thank you, Eric. Muy bien. All right, so there's the double top from the pre-London. Pretty easy stuff, right? Right, Bears? Did you notice something else besides the double top? It's a pivot cluster, including the monthly resistance. Cool. So we're coming up to the 4-hour 21. Could be supportive, although it's quite flat. So I'd be careful in here. So you take the current high and you take yesterday's low, and yeah, this 1200 could be tricky. So set it up. Okay. You see the 5 EMA here? 5 EMA is worth 111.97.8. So let's just call it 112. A bull might want to buy that sucker up. Now, do you guys remember, I guess 3 weeks ago? I believe it was Friday at FX Street. I called the up move on the Euro USD because of this oscillator. Can anybody confirm that? Somebody emailed me and thanked me for it the next day. Yeah, cool. So, I wonder what happens from here. Could be interesting. I'm a bear. I'd like to see this drop to the next level. I'm not saying it will, but it's interesting. My spidey senses are telling me that we just stay in a range until August. But, I've done it before and I'll do it again. We just get in this habit of trading, 450 pips down, 375 pips up, 325 pips down, 300 pips up. Whatever. Just don't fall in love with the trend. Well, the thing is, I'm talking like per week too, right? It gets frustrating when you buy and hold and it comes back. Fine. So anyways, yeah, maybe I buy it later. Okay. Maybe I buy this later. And then I'll sell it after that, later that. I'm watching this hourly. I'm going to watch the 12 area. So I might be short-term long to long-term short. Okay? Oh, I don't take vacation, Oscar. I hate weekends. Why would I want a vacation? I just had a weekend with my wife and kids, and it was wonderful. We were on the beach, and the sun was shining. We're swimming in the water and building sand castles, and I'm like, I got stuff to do. Like, what are we doing? What's the point of all this? Oh, pig dollar. All right, so like the pound's going to be dramatically different. Okay, we can look at that. Okay, we're in a range. Anyways, I can't imagine like 3 weeks of doing nothing. It's just not in my nature. Now, if you drink in my hand and a cigar in the other, I could probably get through 2 hours. But inevitably, I'll grab a pen and a notepad and I just start writing. Honestly, that's when I do nothing. That's what I'm doing. I'm so deep in thought, I have to write them down. And sometimes I get in a funny situation where I have so much going on in my brain that I can't function. So that's why I have to write things down. So I have notepads full of my thoughts because I can't drive because my brain is so overloaded with information. So anyways, we're right in the middle of the range. I couldn't possibly know what direction this is going because I need to know, are we trending up, down, or sideways? I say sideways. Good. Are we at support or resistance? No. Next. Okay. Let's go to the kitty cat. Let's do it on this other one because I think I drew it. Didn't we say, what was it, Wednesday, London, we were going to buy US CAD? Was it? That it was going to fall till Wednesday, London Open? Somebody wrote it down. Which was weird, right? Because somebody's like, that's a pretty specific, trade plan. Something funny like that. I'm like, well, what else do you want me to do? So, was it Ken? Yeah. All right, so here we are, New York. We've hit my support. If I'm going to be right, the support's going to hold. We're going to move sideways through the rest of the day, work up to sideways. Asia's going to bring it probably lower and retest. So how about this? Let me draw it. So what if we do this over the next, it's still going to be 12 hours away. It's still 15 to 20 hours away. So we do this, and then London buys it and we're gone. Is that precise enough, Kenny? Isn't that funny? It's funny stuff, isn't it? I'll tell you why it'll work, because if I'm wrong, it'll just fall farther and we don't get ourselves into a trade. That's how I know it'll work. Because remember, I can't control whether it works or not. I can control whether I trade it or not. Should you look for a double bottom? I'm actually predicting the double bottom. Not on a 4-hour chart, but on a 1-hour chart, right? So in the case of the next 12 to 15 hours, we're going to double bottom, and then we're going to long it at the London Open. We're going to? I shouldn't say that. I'm going to look for the opportunity. For example, within 2 hours of the London Open, I'm going to look for a 15-minute stochastic cycle confirmed by a 5-minute stochastic cycle off the double bottom, off of the pre-support, in the direction of the prevailing trend. That's what I'm going to do. Or I don't do that. But I don't do anything else either. You see the difference? I don't swing both ways like a broken gate. I either do that or I go create a new trade plan, which would probably look for the exact same thing but down here at this level of support. But you got to have a plan, right? You got to stand for something or you'll fall for anything. So that's my plan, Stan. Funny thing is, That was my plan 2 weeks ago. Just look at the price action, guys. When we were down here, consolidated, then it broke out, so my plan was to buy the dip. Resistance becomes support, which we did. Then we broke through the next level of resistance. All I'm suggesting is this support, 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 that resistance, this support becomes support. Whoa! Really? Yeah, I know. Requires like a certain sophisticated mind. And there we go. It's oversold. That's support. So yeah, London Open, I'll probably be long and doing just fine. Well, look at this. So Ken's like, so you just stick to your bull side? Only because we're at support in an uptrend. It's still an uptrend until we get a lower low. I don't have a lower low. It's an uptrend. It's not me. I'm not making the decision. Right? The market's making a decision. So if it decides to go up, I'm going to buy it. The last swing low is right there, Mike. See, I have it zoned. Oh, you're doing it like it's 5 pips lower? No, dude. Come on. Look at my green zone. We've had this green zone for months, ladies and gentlemen, months. Since February, I've had this as a support zone. Actually, January, it looks like. So it was support, like I could really get in there, right? Support, 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 right? Support, support. Yeah, so it might go up. Okay? If we find ourselves down here, Mike, if we find ourselves down here, I think that's a pretty clear break of support. I'm done. I just walk away for a while. Okay? It's a zone, it's not a precise to the pip. No, that's my support zone. It's all good in the hood. But it looks like if it wants to go up, it should go up now, right? So how does it reverse? Like an old man easing into a hot bath. So what that means is now that we're at support, it's not going to go straight up. Okay? That's what I remind myself. It's not going to go and do this. Okay? It's not just going to go like this. When we find ourselves up here, 8 hours from now. It's not going to do that. So if it's not going to do that, what's it going to do? Well, it's got to move sideways and give a reversal pattern like a double bottom to get everyone else to recognize what's happened. Because not everyone sees it. Okay? So it'll take a while to get everybody on the clue train. So, let's see. In 3 hours, London will be closed. Vast majority of the market's going to disappear. So do you think the double bottom is going to happen on this 4-hour chart in the next 3 hours? It's not even possible. Could we identify this as hardcore support over the course of the next 15 hours? So there's my wild and crazy guess, guys. Wild and crazy guess. So I'm going to guess that right around the London Open, we will have established this as support. It'll probably look like this, kind of, and then off we go. Maybe it doesn't quite double bottom, but, you know, kind of like this, right? Now, yesterday, I already predicted all of this. Now, how in the world did I do that? Well, I told you guys that I saw this as support, but we hadn't hit there yet, that the oscillator was falling, but it hadn't been oversold yet. So we had this fib down. So the idea was sell it down into support, and it's going to reverse its support and then work its way to the top range. After this is oversold, after we're at support, and after it consolidates. So on Monday at 9 o'clock in the morning, I said, well, Wednesday at 3 o'clock in the morning, it'll reverse and go up. So yesterday, short-term short to long-term long. So far, we've gone from this area up in here down to this area here, and so far it seems to be fine. We're at the very edge of support. Now, is there, you know, we could add layers of complexity to this. For example, look at pivot points and stuff, right? And then try to overlap those as well. And that's why, Mike, you know, you don't call a lower low just based on a couple of pips or a few pips. You kind of have to read between the lines a little bit and ask yourself, well, why would it be support this week? Just because it was support in this third week of January doesn't mean it's going to be support this week. So you need things like, you know, okay, let's look at this. So it could possibly be down here, Mike. It could work its way down, hit the weekly reversal pivot point, monthly central pivot, and then cycle up. Okay? So I will call that as the bottom. Somewhere between where we are right second, because that's sort of the price action. But this could come down, let's say over the next 8 hours, touch this and then pop back up, and it'll look like a wick on the daily chart. Or even come down over the next, let's say, 3 hours. Let's say, so the next 3 hours of the London trading session, price drops down to here, pops back up, and on a 4 hour, it just looks like a wick. And it came down, touched it, popped. And then we're already well on our way. So we have this weekly reversal pivot area, monthly central pivot point, oscillators ready to go. Now what you're looking for is reversal patterns. Okay. So how about somewhere around 123, we look to get long and strong. Now, did I say pull the trigger? No, I said look to be long and strong. So that's where you look at smaller time frames. Well, what if you wanted to front run the equity open, which is going to open any minute now, right? In less than half an hour. Well, then you might be looking to long this 5A cross up and just take the Stokes cycle and have a stop down in here. And if that fails, try it again down here. You know what I'm talking about? See, one of the best times of trading is right before the U.S. equity open, just before the London equity open. So you could throw down a trade in the next, well, it should be before it opened in 21 minutes. You should have your trade in and at break even at this point. What this is telling you is if you were going to front run the equity open, you would actually short this because you're at the high cycle of a 5-minute chart, and that it's telling me that price is going to drop to 123 within the next 90 minutes. At 10:34, how about this? At 10:34 New York time, we will be touching this. Okay? And then we'll look to go long. What do you think about that? Okay. What happens here, let me move, okay. And then I'll move this closer to compensate. Okay, what this is saying is if I'm right, all the money that comes in to capture the New York session, or leaves the New York session, what that's going to do is it's going to move this USD CAD. Okay. Has it happened yet? No. In 19 and a half minutes, the U.S. equity market will open, and it will either carry or crush my trade. But if I'm right, I make more money than I lose. So Mike, are you going to look at the charts at 1034? If I'm right, you slap me on the back and say good job, and if I'm wrong, I was wrong, didn't lose much money. Okay? Of course, I'm already profitable. It's been 1 minute. So you have to already ask, so Mike says down there, if that happens, you'll look to long. All right, although I was predicting pre-London tomorrow, so you're a bit early, but you could. So you need to ask yourself right now, what will put you long? You should be able to get out a pen and paper and draw the pattern that you want to see on the 1 minute chart. Okay, draw it. And then watch for it. And if you see it, you trade it. If you don't trade it. And what's the likelihood of you being profitable if you get what you're looking for and you trade it versus, well, any other situation, I suppose, wouldn't matter because you wouldn't be in the trade. You see, I probably only look for what? How about this? A higher high, higher low. 5A cross. Stochastic cross. That'd be about it. I guess you have a double bottom. Yeah, that'd be it. I don't know how many patterns that was. 4? 3? I don't know how many. What patterns how many patterns do you have? Okay, well, stop doing that. Yeah, well, stop doing that, Mike. I've never taught you that. I've asked you to forget all the other crap you brought in. Leave, check your baggage at the door, Mike. It's funny when they tell you, look for the pregnant cat candlestick pattern. There is a dude that will sell you a book for $500, not $500. They're like $150, right? To buy his book on 2,000 different candlestick patterns or whatever it is, right? You know how I'm talking about? He says that he's the one that went to Japan and got all the secret books from the magic library and translated them into English, and now he's so successful. So I have spoken at all the major trading conferences around the world. They don't allow him there. Now, why would they do that? I did see this dude, I'll have to admit, I did see this dude at a trading conference once, but they never invited him back. And then he came to me one time, like many years later, because the service that I was running was phenomenally successful. And he came right up to me and he's like, hey, we can make a lot of money together. And he gave me his business card and I'm like, I already have a lot of money. And he looked at me just dumbfounded. Like, I don't need a lot of money. Already, what are we going to do? I mean, this is funny. I already have a lot of money, so I'm not interested. But it's just funny. But I did see this dude at a conference, and at the end of his, presentation, which people paid like $200 to go see, at the end of it, he said, "Well, normally my DVD course is $3,000," and he went on. It was like a 3-hour course, and for 1 hour it was a sales pitch. And he said it's normally $3,000, but because we're so special, it was only $1,500. But we had to act today. And he pitched it and pitched it and pitched it and pitched it. And then he handed out a piece of paper, and I swear to you, he wanted us to write down our names, our addresses, our phone numbers, and our credit card number and the expiration date on a piece of paper. And he would charge us the $1,500 and mail us and I just couldn't believe how dumb that was. Just like, are you nuts? But anyways, I digress. So here we are in our little trade. This is sort of the moment of truth, don't you think? Got to get lower than this. If we get lower than that, I'll jam my stop and take a walk. There'll be just nothing left for me to do on the trade because the hard work will have been done. Oh yeah, and Eric, the other thing is people were signing up. Well, I'm sure they're all rich now. They found the easy way to make money and they're all rich and successful. Yeah, Marcia. So I don't know. I don't think we need to sit here and wait and watch this. And this is a little peculiar here. It wants to go up, guys. Okay, it wants to go up. So we'll see. All right, I was just showing you an example of how to front run the equity open. And if it does fall, it's only going to fall a little bit, and then it's all going to want to go up. All right. So I'm just totally overriding the 15-minute chart and following the hour. Okay. And so there's a lot of finesse on this one, but it's a timing issue, right? So maybe at 10:35, this thing will be working its way north. Mark, so oil's at. Let's finish the oil one because we've been watching this for 6 months, right? So what? 3 weeks ago, I had it coming down. Right, so let's see how the pattern's going. That's not bad. Okay, I admit it, I have it as a lower high, but it double topped. It's the same thing to me. It's the same thing to me. But look at the 4-hour, guys. Okay, that tells me it's going to fall for a while, maybe like a couple of days, but we're not through the 21, are we? So we got to get below that. Wait, that's EURUSD. I thought that didn't make sense. Did I click on the wrong one? This was supposed to be oil. Oh, there it is. I'm sorry. I knew that didn't look quite right. There we go. So we have this, right? It's supposed to break. We had it here, the lower low, predicted the lower high. Got to drag this. Looks like we're just actually in the range.